I believe 2026 and 2027 will be two of the worst years in the stock market, that it'll actually be down and could be down.
You're watching Silver News Daily. Subscribe for more.
The next 2 years will destroy everything you thought you knew about the markets. According to Peter Granditch, 2026 and 2027 won't just be bad, they'll be catastrophic. We're talking about a financial apocalypse that wipes out 70% of traditional portfolios, sends shockwaves through Wall Street, and forces investors into a brutal retreat. Granditch isn't sugarcoating it. He's calling this the end of the road for paper wealth. The only survivors? Those holding cold, hard cash and physical silver. But here's the kicker. The chaos won't just come from crashing stocks. It'll come from something deeper. The collapse of the fake paper system that's been propping up everything from the S&P to the COMEX silver market. That system, he says, is already breaking down. And when it finally gives way, silver won't just rise. It'll explode. We're not talking about a gentle bull market. We're talking about a violent eruption that will rewrite the entire financial playbook. So what's fueling this collapse? And why does silver stand to benefit more than anything else? Stick with me, because what you're about to hear could change how you see every asset in your portfolio.
Bull than I was for several years. But even I felt a couple months ago we needed a correction. We were in a parabolic race. We did. We got slightly under 4,000. There was a chance talking about, can go as low as 3,600. And Elijah, as I told you before we started recording, even I'm impressed of how well gold handled a natural needed corrective phase and has resumed its climb again. Listen, we up $100 and something yesterday. Now, granted, when gold was 2,000, that was like a $50 day. We must keep that in mind. But nevertheless, I'm not surprised today, that we opened higher, saw some follow-through buying, and of course, some profit taking. But nevertheless, both gold and silver, gold still leading, silver's tagging along, but both of them most impressive on how they've come through this corrective phase. And of course, they're doing this in the face of the still stiff competition. Everybody and their mother, I hope I can say it that way, Elijah, is touting Bitcoin. There isn't two posts where there isn't another Bitcoin prophecy that they're talking trillions. The president, his kids, every bank's going to have it. There's all sorts of law. And it can't get out of its own way, and it's rolling over, which and this is all happening while gold just remains really, really strong. So I have to tell you, even I'm impressed. I thought the corrective phase could last longer. It still may back and fill here, but I think anybody that was looking for, 500 or 1,000, these people popped out of the woods all of a sudden saying it was over. We're going back down towards 2,000, but just very, very impressive so far on how gold has handled itself.
It starts with fear. The kind of fear that makes even seasoned investors dump their blue-chip stocks and run for cover. Peter Granditch says we're heading into a period where faith in the markets breaks down completely. And when that happens, the first lifeboat people scramble to is cash. Not stocks, not bonds, just raw liquidity. Because in a crisis, cash isn't boring. It's power. This isn't just theory. We're already seeing the early signs. Corporate insiders are selling shares at the highest levels in years. Institutional money is rotating out of equities, and fund managers are raising cash allocations at a pace not seen since the depths of 2008. But Granditch says this time it's not about waiting to buy the dip. It's about exiting the system entirely. Cash isn't just a safe haven, it's a weapon. A weapon to use when the dust settles and the real assets, the tangible, undervalued ones, are up for grabs at fire sale prices. And while everyone's watching the stock market's slow-motion implosion, something far more important is happening beneath the surface. The paper markets, especially COMEX, are being drained from the inside out. Physical silver is vanishing from vaults. Inventories are crumbling. And for those paying attention, this isn't just a liquidity shift. It's the start of a structural breakdown.
Well, I wouldn't even call it any more of a correction. I think I would say, you never say never in this business, but I would say it's an 8 or 9 out of 10 chance that we've seen the lows. So, just under 3,900 maybe. look, we just had today news. We had the ADP number, which has always been much more dependable than the government numbers. And if you think they didn't hanky-pank with the employment number before, wait till Trump has his person in there, how those numbers going to come out. But the ADP numbers today were very negative. Dollar got hit hard, a real softening economy. We're seeing a lot of geopolitical news. That one of the things that I think helped turn gold around, and almost no one in the mainstream media talked about it, but not surprising, is what's happening around Venezuela. So we sent a whole bunch of military down there, and guess what? Russia and China has as well, and has been adamantly supporting the fact that the United States should not consider an attack on Venezuela. I also think the geopolitical concerns is that people witness that Trump blinked. You know that I felt that he went from day one the wrong way. He took a big stick into this trade war when he should have took an olive branch. And basically he blinked, especially to China. Nothing net has been gained from China. Even China today put out news that, hey, we'll give you some magnets for your civilian, but we're not going to give it to the military. Of course they're not going to give it to them. We have a defense guy that's in charge of the defense saying we're going to defend Taiwan. They're talking about one day they're going to take control of Taiwan, and they're going to send us magnets that are going to be used to help fight them. You know, it's preposterous what people don't look at in the general financial media. But I think all of this, and then just the long-term story about the change in monetary, that people are recognizing that gold's money again, that central banks are getting rid of bonds, including our own, and adding gold as a monetary base. And when you start hearing, this I think was perhaps the biggest news in weeks, when Main Street brokerage firms, and forgive me whether it was JP Morgan or somebody like that, actually started talking about taking 20% away from bonds in the 60-40 plan and going 60% equities, 20% bonds, and 20% gold. Man, if you needed anything for an early Christmas present as someone that sells gold bullion, you got it, my friend.
The paper-silver game is breaking down, and fast. For decades, the COMEX system has been the backbone of silver pricing, a playground where contracts outnumber ounces and manipulation hides in plain sight. But that illusion is cracking. According to Peter Granditch, what we're seeing now is a historic shift away from synthetic silver toward the real thing: bars, coins, and bullion that can't be printed or papered over. And the numbers back him up. COMEX registered inventories have plunged to near 4-year lows, dropping from over 150 million ounces to just around 120 million. That's not a dip, that's a hemorrhage. Silver is physically leaving the West, flowing east into the hands of industrial giants, sovereign vaults, and investors who no longer trust Wall Street's promises. This isn't some fringe theory. It's visible, it's measurable, and it's accelerating. The COMEX system has relied on the illusion of abundance. But once physical supply can't meet paper claims, the illusion dies. And when that happens, the price won't just move. It will violently reprice to reflect actual scarcity. Granditch calls it a destroyed market. He's not exaggerating. When the last ounces leave the vaults, the paper game ends, and physical silver becomes the only thing that matters.
Well, they correct it like just gold did. I wouldn't call it huge. I called it a needed and necessary. But here's the thing to remember now. Another quarter's gone by. They're selling gold. Imagine you're a Canadian gold producer. Gold is around $6,000 Canadian. And the biggest cost may be for a producer up there in the area of 2,000, some are below that. Man, they'll take that profit margin all day, especially when oil prices are going lower, which is one of the biggest expense, and labor costs. So the majors are in excellent shape, but what's been very pleasing for a person that made such huge bets on the junior resource end of the market, they're now stepping down aggressively and doing deals, particularly one where a Mexican major producer who had no interest in Canada up until just a couple of weeks ago, and now went out and made a major purchase of a company in Quebec. So I think A, the majors are going to keep printing money. B, their stocks are going to do quite well. And C, M&A in the metals and mining industry is into its highest gear in years.
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, Real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell. Comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver shipped directly to you. So get in early, stay active.
In November 2025, silver didn't just rally. It detonated past the $50 mark, sending shockwaves through the precious metals world. That wasn't a fluke. That was a signal. For years, silver had been trapped under a decade-long resistance wall near $30. It teased the market, tapped on ceilings, then fell back. Until now, when it finally broke through that multi-year barrier, it didn't stop. It ripped higher with the kind of energy you only see when suppressed pressure finally erupts. One day in May 2024 alone, silver spiked more than 6%, smashing through $32 and reaching levels not seen since 2011. And this wasn't retail hype. This was driven by raw demand, industrial, speculative, and institutional all at once. The move caught Wall Street flat-footed. JP Morgan, Bank of America, even the cautious analysts were forced to acknowledge it. Silver had entered a new paradigm. But here's what matters most. Once silver breaks a major resistance like $30 or $50, it rarely returns to old levels. The chart rewrites itself. Price action accelerates. Volatility explodes. And for the smart money, that's not a red flag, it's a green light. As silver flirts with $50 and beyond, traders are no longer asking if it can go higher, they're asking how fast and how far. Because once this train starts moving, there are no brakes.
Well, let's look at that. The last great bull market was 2010 and 11, and they are in far better financial shape then. They're not leveraged as they were then. Listen, by 2014 or 15, many of the majors were concerned we're going to be able to keep the lights on. So they are in a much better shape. Number two, they are recognizing that we are in a unique political environment where politicians who never stood next to miners and wanted to be seen with miners now openly embrace them and call for it. I'm involved in a play in British Columbia in an area that maybe 20 years ago people would say, oh, they'll never have a mine there or whatever. Now we had from the far left political arm, politically in their own house, embrace this company and tell people how important it was. So this critical mineral talk that people hear about is real. Governments, because of decades of ignoring it, and it can't happen overnight. People talking about, yeah, the United States and Canada, they can pass all the laws and put all the money aside. This isn't just something you go out, you buy it, and you start using it tomorrow. It'll take years to get to that level. And that's why the majors recognize that right now they've had cards to play unlike any other time in the 40 years I've been in this business.
What makes this silver run different from every rally that came before, it isn't just the price. It's the engine driving it. This isn't speculation. This isn't a hedge. This is hard, irreversible industrial demand that's tearing through supply like never before. Silver has become the heartbeat of the green energy revolution, and the world simply cannot decarbonize without it. Solar panels, electric vehicles, 5G infrastructure, every one of them depends on silver, not as an option, but as a necessity. And here's the problem. You can't substitute it. Silver's conductivity, efficiency, and malleability make it irreplaceable in the technologies of tomorrow. The solar industry alone now eats up nearly 20% of all global silver supply, and with climate mandates tightening across Europe, the US, and Asia, that figure's set to climb. Billions are being funneled into renewable infrastructure, and with every new solar farm and EV battery, more silver disappears from circulation, forever. But it's not just environmental policy fueling this frenzy. The tech world is accelerating too. AI servers, semiconductors, and high-performance electronics all require silver. And as that industrial usage surges, it's colliding head-on with an investment awakening. The result? a supply crunch that's no longer theoretical. It's happening now, and it's tightening with every ounce removed from the market. This isn't the silver of 2011 or 1980. This is a new cycle, and it's powered by the demands of the future.
Well, if there is a melt up, it's very thin. It's not widely participated. Again, it's basically in technology and more thinner in AI. I think we're starting to see some of the potential negative ramifications. We're starting to see, classic people who recognized bubbles before getting very negative on the AI. We're starting to see that they are performing what had happened back 20-something years ago when they start to use unique ways of financing each other to try to keep the game going. The only thing that I think that could prevent that sell-off is we're getting into a very seasonally positive period for the stock market. No charcoal wants to be seen in a stocking from about our Thanksgiving through New Year's. It tends to be a point in time when people are just merry. Now, there's been a couple times when the stock market went down in December, but basically December tends to be a good month. And here's why I think it's important to use our Thanksgiving Day for us Americans. After that, you're not going to see hedge funds making any type of bets. They've already figured out what their payout's going to be. Remember, they get paid on the performance of the year. They get the 20%. And most of them are up this year. It's been a pretty decent year for them. So I don't think they're going to be risk adverse and be heavy sellers or buyers. So I think any of the major downturns that can occur are going to occur in 2026. But let me tell you this, and you're the first interviewer I'm sharing this with. I've spoken it to my own clients and followers in recent days. I believe 2026 and 2027 will be two of the worst years in the stock market, that it'll actually be down and could be down hard to the point where cash, separate from metals, what holding for metals, is the predominant feature in the portfolios, at least to our planning group clients that I've shared. And I use this kind of analogy when they ask, well, Peter, how much should I have? Whatever your age is, that's the percentage. So in other words, if you're 30, 30% cash. You're going to be 70 like me, near 70. And the reason is if I'm right about a couple of bad years, especially for those who retire that can't afford any loss of principal, they can ill afford that and then try to somehow make it up in the latter years. So overall, we may still hang on for the balance of this year and not have any widespread decline. But I think 2026 and 2027 could be among the two worst years we've had in decades.
Now here's where the cracks turn into a chasm. The silver supply deficit isn't just a headline, it's a trap, and the world is already caught in it. For 4 straight years, the global silver market has been running a deficit, with more metal being consumed than mined. In 2023 alone, that gap hit 140 million ounces, and it hasn't stopped growing. What's terrifying isn't just the size of the deficit, it's how hidden it's been. Above-ground stockpiles gave the illusion of stability, but now even those reserves are vanishing. The Silver Institute warns that much of what remains is either illiquid or geographically locked. Translation? It's not coming back to market. And mining isn't riding to the rescue. Ore grades are falling, environmental pressures are mounting, and capital investment into new silver production is lagging far behind demand. Average all-in sustaining costs for silver miners sit around $12 to $15 per ounce. Yet prices are double that, and still, production isn't surging. Why? Because silver isn't easy. It's often a byproduct of other mining operations, which means you can't just flip a switch and create supply. Meanwhile, demand is rising on every front: industrial, monetary, and speculative. This is a classic supply trap. When deficits stack year after year, they don't just create pressure, they create a spring, coiled tighter with every shortfall. Eventually, that spring snaps. And when it does, silver won't just move, it'll leap, violently and unpredictably, as buyers scramble for ounces that no longer exist.
I don't think it's going to happen in a crash form. That's why you have that. When you have suddenly people down 20, 30, 40% and the margin department's calling you, you sell whatever you can in order to meet that. And you ask questions later. I don't think it's a crash that's going to occur. And I believe it's going to be a rollover and leakage. And there are a lot of reasons, including a loss of the political strength that Trump has had, economic weakness that's going to be really seen by everybody, silver unrest. There's a whole bunch of things now. There's actually 12 points that I've shared on why that'll be. But I think that's going to be over time, Elijah. And as long as it's over time, gold won't be sold because people have to raise money. And quite frankly, again, I want to point to what we said in the onset of this, and I may be singing to the choir, but we're seeing financial service firms. Listen, for 39 of the 40 years that I've been in this business, Wall Street treated gold like kryptonite. They didn't want to go near it. They feared it would kill them because it kills their favorite things, stocks and bonds. And now we have major financial institutions openly telling their clients to make gold part of their portfolio. So I don't know how then we have huge declines when they're first coming to this. Now, when we start going to parties and taking the Uber and the guy that's waiting on us is telling us about some hot gold stock or why you should own gold, maybe that's going to be a time when we reach the peak, but we're so far from that.
While silver quietly builds toward an explosive breakout, gold has already lit the fuse, and central banks are holding the match. Over the past 2 years, the world's most powerful monetary institutions have been on a historic gold buying spree. The People's Bank of China has added to its reserves for 18 straight months. Nations like Turkey, Poland, and India are stacking gold at a pace that dwarfs anything seen in decades. What does this have to do with silver? Everything. Because gold isn't being bought for profit, it's being bought for protection. These central banks are hedging against currency devaluation, geopolitical instability, and the slow-motion death of fiat confidence. And here's the catch. Gold doesn't move alone. When institutional confidence crumbles, silver follows gold's lead, but with more force, more speed, and far more upside. It's always been that way. In past monetary crises, silver lagged gold at first, then overshot it violently. And if central banks are preparing for a monetary reset, then silver is the secret weapon nobody's watching. The gold-to-silver ratio, already at stretched levels, is primed for reversion. And when it snaps, silver won't just close the gap. It will surge as investors realize what central banks already know. Paper promises are dying, and tangible assets are the only safe harbor. Silver may not sit in central bank vaults today, but when confidence collapses, that changes fast.
There's other thing that I think is very important that I might have missed, I should have stated earlier to you, is this also, the other bullish reason for gold. Let's get out of just looking at what's happening in the U.S. in gold, and let's look what's happening in the world, particularly where there's growth in the world, predominantly on Asia. They're getting on lines to buy gold, and they're taking their weekends, young Chinese, Asian, Vietnamese, going into stores to buy physical gold, ownership of gold, not just because it's a pretty necklace, but as an investment. And what's happening on our weekends here in the U.S., Elijah? We have people going into stores to buy stuff they really don't need with money they don't have. So that's another bullish factor. And if somebody said to me, what's the single biggest difference in this global market than any others you've been in? And that is the dominant nature of the physical market. The paper hangers, the people who have manipulated, we call it the Crimex, the Comex, whatever you want to call it, out of London, New York, they're at least badly wounded, if not. Now, that doesn't mean like in the old baseball, they bring the old timers back once a year and they get their day to hit a few pitches. But I think the paper market, which we were used to and always saying, okay, it's only a matter of time till they show up, they've been destroyed. And main reason they've been destroyed is because their market has been taken away from them. Gold has moved to the Far East, and the people in the Far East have other desires to use gold other than as a paper hanging place. And that's why I think is another bullish reason why we're not going to have major downturns anytime soon.
Now the shockwave is hitting Wall Street. What used to be fringe thinking, allocating serious capital to precious metals, is now echoing through the halls of the largest financial institutions. Banks that once mocked gold bugs are quietly adjusting their models. Hedge funds that lived and died by equities are building positions in commodities, and analysts from Goldman Sachs to Citigroup are now calling for gold to break $3,000. But here's what they're not saying out loud. If gold deserves a larger slice of the portfolio, then silver, its more volatile cousin, is the overlooked jackpot. Because while gold is being promoted as a hedge, silver is the leverage. And this isn't speculation, it's math. Global portfolios are still underallocated to metals. Gold makes up less than 2% of global financial assets, and silver isn't even counted. But as inflation, interest rate instability, and debt crises spread like wildfire, institutional investors are finally rebalancing. Peter Granditch is warning that portfolios need a major reweighting toward cash and precious metals is no longer just a doomsday scenario. It's becoming policy. Asset managers are waking up to the fact that the old 60-40 model is broken. And in its place, a new model that includes real assets, hard stores of value, and, yes, silver. The floodgates are beginning to open, and when institutional money moves, it moves in billions. The silver market is tiny by comparison, and that mismatch is where the real opportunity lies.
No, one of the 12 points that I have about my concerns about the general stock market is political divisiveness. And I think what people should realize now, imagine if we have another financial crisis, whatever causes it, could these groups go in and do anything close to anything that's been done in the past financial crisis? And I think the answer is no. Let's also not forget that they're just pushing it off again. They're going to, first of all, we haven't had a balanced budget since 1991. I mean, you and I would have been long broke, gone family if we kept not balancing our budgets for all that time. And with that comes the 38 trillion. Trump's out again saying that, Bitcoin's going to solve and pay the debt. No, all this stuff. And what are we doing? We're piling up that debt at the fastest pace ever. And we have no political harmony anymore. Zero. Even within the parties. I mean, this senator, give him credit, the Fetterman from Pennsylvania, who everybody thought before he was elected was, crazy guy, how's he the senator? He's probably been on both sides, the most sane middle ground, considering about America first, both from Republican and Democrat. And they want to throw him under the bus. The Democrats want to, so the political disharmony, that even if they patch it up and they push it out to January, it's done a lot of damage. You know how much economic damage was done? How many people? I have 3 different friends and clients are still stuck in towns that they couldn't get flights back and all, and their businesses up. I mean, there's just so much going on. The bottom line is this: Trump has given some hope initially on, but I don't think he's followed through on some of the most key things that I think are going to be critical. And I think he's even going to see a loss of his political backness. So as we get into 2026 and we start to have primaries for the elections and all, I just think that's going to be another negative reason for the stock market. And all these things, all of them, are all bullish for the gold market. There's nothing yet. Somebody asked me the other day, and maybe Elijah, I'll put words in your mouth by having me ask it myself to myself. What's the one thing that would turn you off on gold? If we saw central banks start selling for whatever reason of any significant size, then I think the party would be over, no matter where we're at. But right now, nothing could be further from the truth, and that's why I remain so bullish long term.
And while silver itself is stealing the spotlight, there's a hidden accelerator revving in the background. The miners. Silver producers are no longer just scraping by, they're thriving. With spot prices hovering around $30 and all-in sustaining costs near $12 to $15 per ounce, margins have doubled, and that surplus is being put to work. We're seeing a wave of M&A activity, as cash-rich majors race to secure future reserves before the supply picture tightens even further. Juniors with promising exploration results are being snapped up at premiums. Pan American Silver and Endeavor Silver aren't just posting record cash flows, they're reinvesting aggressively into exploration and expansion. This isn't just bullish for mining stocks, it's a flashing green light for the entire sector. Because in every historical silver bull market, the miners don't just follow the metal, they outperform it. We've seen 500% to 1,000% gains in past cycles, and the conditions today are even more explosive. But there's a deeper signal here. When miners, the closest players to the metal itself, begin consolidating and expanding, it means one thing: they expect higher prices. They're not guessing. They're building for what's coming. And if you want to know where silver's going next, don't just watch the price, watch the producers. Their actions speak louder than forecasts, and right now they're screaming bull market.
Well, thank you for that time. You always give me that, and I appreciate it, especially now when we get into a season where even people that may not be very faith-inspired tend to be a little bit more spiritually led in terms of wanting to help and maybe throw an extra couple dollars in. Or what we did see during this shutting of the government was something quite interesting. We saw, just like we saw when COVID hit, how many Americans are so dependent that they can't really last more than a couple weeks on their own. And I'm not here to judge any of them. But the bottom line was we saw within a week or two, people had no ability to even feed themselves. We saw with COVID, as soon as people couldn't work, they couldn't pay bills, so we had to create trillions of dollars out of the air. But what we should be really looking at that is, and the movement for myself is how many Americans now have trouble just feeding themselves, clothing themselves, housing themselves. And I'm not going to get too caught up on whether they're an American or an illegal alien. For me, they're all God's children. There's no difference from the spiritual eyes on that. And I think one of the things that hopefully will be moved out of this, and I saw some of this. I'm very involved. I just did a conference here this past Saturday with a well-known person from the metals industry. We raised almost $13,000 now for a local food pantry who's in desperate need of it. But the amount of people that we saw throughout the nation who were really concerned about where would I even be able to eat tonight, I think we should say to those of us who've been blessed with bounties of food and not concerns about that, that we need to find it in our hearts and our spirit, not just around Thanksgiving and Christmas, it's important, but 12 months a year to find ways of doing that. I know, and I speak for my wife, that we could get a bigger car, we could get a bigger house, we could take more vacations, but we've concluded now, especially, with all the blessings, and just so you know, I'm going to be a grandpa for the first time. So with that and all, and measuring how those blessings are, I think we're called extra special now to help our fellow human beings and not worry about the color of their skin or the nationality at this point, but they are all our God's children, even those who are advocating against what our God stands for. That's the ultimate test of a Christian. That's the ultimate thing, to accept what Jesus said, to love him with all our heart and love others and love our enemy. And let me tell you that's probably the hardest thing. And I haven't managed to do it yet, but I haven't given up trying.
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell. Comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver shipped directly to you. So get in early, stay active.
And if that price comes because of all hardships and somehow you were prevalent enough to be smart enough to own it and whatever, don't hoard it completely. A little less, you'll still be able to go by and the wonders that you see, if I can just close with this, Elijah, the wonders that you see when people get that little extra food that didn't think, their gratefulness, you can't measure that in dollars. And there's just a feeling that you get of joy that nothing else, even seeing gold go up $100 comes close to equaling, to see another human being be happy or be glad about something. And I'm not saying you're godlike, but you're called by as as you and I as Catholic Christians, that's mandatory. That's not an option. It's mandatory. And so we're doing what we're supposed to be doing. And it's a struggle to do that. We're in a you and I have failed human natures. We're sinners saved by grace. And, but thank for that grace, because none of us make it without it.
Everything Peter Granditch has warned about points to a single brutal conclusion. We are heading into a collapse of confidence so severe that paper wealth, speculative assets, and over-leveraged markets will be gutted, leaving only tangibles standing. And when the dust settles, it won't be stocks or crypto leading the recovery. It will be silver. Not the paper contracts or synthetic ETFs, but real physical silver. The kind you can hold. The kind that doesn't default. The kind that survives. This isn't just a shift in markets. It's a shift in mindset. Investors are waking up to the lie of infinite liquidity and realizing that only finite resources hold real value. Cash may be king in the crash, but silver is the kingdom that rises after. The vaults are emptying, the miners are booming, the industrial demand is relentless, and the system holding it all together is starting to tear at the seams. What's coming is not a correction. It's a revaluation. And those who see it early will be the ones positioned on the right side of history. If you're still watching, now is the time to subscribe and prepare for what's next. And remember, this is not financial advice. Speak to a professional before making any financial decisions.